Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee, which today is by Peixoto Coffee Roasters. That being said, in today's episode, I'm talking about what you need to know about the long maligned, dreaded Biden executive order related to crypto, our usual 404 Logic Not Found segment, and more. So make sure you stick around for all the updates we've got in store on the show today. If you like crypto, please do subscribe to the YouTube channel and hit the bell notification button, or you can follow the podcast on your platform of choice so you get a heads up whenever I post new episodes of the show on all platforms. And better yet, if you are a subscriber to the YouTube channel and you leave a comment on the YouTube video, you are automatically entered to win a random draw for a Keystone Pro hardware wallet every single week, and I reach out to a random winner after the show posts. And finally, just a friendly reminder, I wish I didn't have to make every week, but please be aware of scammers across all social media platforms that are pretending to be me and asking for money or for personal info or just reaching out and acting weird. I'm not going to reach out to you. I won't ask you for money, and if you get a comment on YouTube or on a social media platform that asks to contact me or asks you for money, report it, ignore it, and please be safe. Now, the headline of today's video is focused squarely on the biggest news in crypto that's happened in a good long while, and that was the long-awaited and frankly long-feared executive order from the Biden administration related to cryptocurrency and digital assets. Now, for months, people have been wringing their hands in worry about what this executive order might bring and might do to crypto. And I totally get that. Based on the regulatory landscape lately, it was not unreasonable to be concerned about what this was going to do. However, as it turns out, this executive order is actually more good than bad, in my opinion, having actually gotten the chance to read the body text of the order. So let's break this down a little bit and kind of give the highlights and the lowlights. First and foremost, the biggest takeaway is this. Everyone needs to understand, if nothing else, this one thing. This executive order means that the days of crypto being a nerds-only club that's irrelevant to the rest of the world are now over. We are in the big leagues now. This is the time where we need to quit fighting with each other and acting like petulant children about our favorite crypto bag going to the moon and my protocol is better than yours, and actually moving forward together as a collective group, an industry in support of decentralized technologies. Akin to the early days of the internet, this is the chance we have to influence the tides of legislation and regulation related to this space. And it's likely the last opportunity to do so before rulemaking begins and it's too late. So the executive order outlines the path, and it's up to us, people who really understand this space, to engage with lawmakers, both indirectly and directly, to help influence what happens from here on out on the path to the ever-elusive regulatory clarity that we desperately need. You may hate me for saying that, but it's just the truth. And that's the first takeaway. It's takeaway number one from my perspective. It's the time for us to act and highlight the positive impact that crypto and related technologies have today and will have in the future. And so let's move on to more of the specifics. First of all, the executive order addresses the big red flags that have been raised for years about crypto. Nothing really surprising. Namely, its use for illicit activity and as a means to circumvent sanctions, apropos what's happening in Russia right now, with sanctions drawing this sort of scrutiny around crypto. That said, as we discussed last week, many government officials have also stated that crypto is not a great avenue to evade sanctions for Russia, and there's not a lot of worry there in a tangible way. So let's quell that talk a little bit here and not stress so much about it. Overall, the executive order outlines a desire to balance the regulatory approach to address illicit activities via crypto, including sanction evasion and money laundering, with protecting innovation as well and the thriving digital asset space in the private sector today. That's no surprise. I expect more and more aggressive approaches to anti-money laundering and other financial crime in crypto. And honestly, if it's done properly, that's not a problem. And this is already happening anyway. You see a lot of this going on in law enforcement. Now, the executive order will just formalize the path to a coordinated approach across agencies from my perspective. Now, the other big aspect in the same sort of vein is the idea of consumer protection. Basically, the ability to protect consumers from being swindled, scammed, bamboozled, and the like in the crypto space. And again, I say, please, by all means, root out the scammers and send them on their merry way. Go ahead. I would love to help do this. There's so much trash in this space that needs to be rooted out. And I'd have hoped that regulators wouldn't have to have needed to step in here, but it seems almost inevitable now because we clearly as a group cannot self-police this. So shifting away from the less interesting pieces for a second, there was one notable positive section in this executive order that I want to highlight that is a direct call out for the US's competitiveness in this space. And this one is interesting because it contained language stating that evaluations must be made as to how the US can gain a competitive advantage on the world stage in crypto digital asset development. And this is really good news because it's a far cry from the fears of all-out banning and regulatory hammering of crypto that people have been fearing for a while now. The US wants to be a leader. Okay, I've got some ideas, and I know lots of people in this space who are way smarter than me who also have ideas. One that comes straight to mind is one that actually aligns with another subtle but important item in the executive order, which is the climate impact of crypto, namely Bitcoin and other proof-of-work cryptocurrencies. The US is already the hash rate leader in the Bitcoin mining industry, at least as of the time of recording. So let's shift all of the US Bitcoin mining to renewables and reinvest profits in the development of better, more widespread renewable energy production and storage. That would be a win over China in my book. Mark my words, crypto is the biggest opportunity to cement leadership in technology since the internet's dawning days. So let's please not mess this up. Speaking of messing it up, there was one massive elephant in the room that I knew was coming and have been open-minded about in the past, but have since completely soured on as time has gone on. And that is the idea of the central bank digital currency, or CBDC. There was reference to the study of how and what a CBDC might be for the US, and I cannot express how much I hate this idea. We do not need to follow China's lead to create the world's greatest financial surveillance tool that also happens to create the power to freeze someone out of the financial system at the flip of a switch. That's a power that really should not exist. CBDCs have good properties, without a doubt, but they also have many bad ones, and I can only support a CBDC if it is used as a medium for direct democratic governance of our monetary system by the people. If that's not there, it doesn't have my support. And I'm just one guy, but I'm letting my opinion be known. Lastly, one dubious thing that I noticed, and I may be mistaken, but I don't recall seeing mention of the SEC here in this document in the sections where I thought they would be or where they would be relevant. So does that mean the SEC is not involved or that their mandate does not land in the crypto world? I mean, I'm pretty confused by this personally. Did anyone else notice the same thing? Did I totally miss the SEC's mention? Let me know in the comments or tweet me. So here's the bottom line truth that you need to take from this executive order. The time has arrived for crypto to come of age, for us to show the positive impact of this technology and work with regulators and lawmakers to create the innovation catalyzing environment with regulatory clarity that we need to bring this stuff mainstream in full to everyone around the world. This is the door opening, not the door closing. And what happens in the US will also influence other Western countries along the way. So those in Europe and Canada, for example, should also be paying attention to what is happening here. This executive order called for making the US a leader in this space. So let's make it happen. Simple as that. Now, a brief word from the sponsor of today's show, iTrustCapital. iTrustCapital is my go-to crypto individual retirement account, or IRA, provider, and a tool that I use religiously as I navigate the crypto space. The pre-tax IRA that I have with iTrustCapital allows me to trade crypto in a tax-advantaged manner, meaning I don't accrue capital gains or losses in the process of trading crypto. Now, it lets me make crypto moves without worrying as much about each individual trade's tax implications. Now, remember, trading crypto has risk, and doing so in a retirement account has even more risk because that's the money you fall back on. So everyone's tax situation is different. Please consult a professional, get professional advice so you get the best possible setup for your own specific needs. So US crypto investors can add this tool to their arsenal and earn $100 in Bitcoin for funding their account using the link in the description and the pinned comment below the YouTube video. Now, in other news, one of the craziest stories of the week has to be the sudden departure of two of the biggest names in the Fantom ecosystem, Cronje and Anton Nell. Now, Cronje in particular is known for his work on several famous DeFi protocols like Yearn, and the latest on Fantom, solidly. The news broke this week that both Andre and Anton were exiting the crypto space entirely, which is indeed a bummer because the two are overall pretty great minds and are now not going to be working in the crypto space, and that sucks. However, the real drama came in the aftermath of this news, with Fantom, the project that both were heavily involved in, dropping value heavily in the wake of this news, and I mean heavily. In fact, a now deleted article on rekt.news, some publication I've actually never heard of or read personally until this happened, had reportedly accused several projects in this piece, including Fantom and projects built upon Fantom, of being some, quote, multiple projects all intertwined into a system designed to extract maximum value for a small set of insiders who are now steadily exiting the stage. Now, that's a big accusation, and I think that accusation of sort of, I guess, collusion, of trying to rug pull, I guess, sent the markets plummeting in the Fantom ecosystem. And given that the article is now deleted reportedly, and the Fantom Foundation has stepped forward to make clear the situation related to Andre and Anton's departure from the ecosystem, I'm willing to postulate that this article was factually incorrect. At least I saw no evidence of what those claims were being correct, which I would say is required to make such a claim. Here's the bottom line. It always causes concern when notable people leave projects or move out of crypto entirely, but it's happened countless times and will continue to happen. There are many, many smart people out there to pick up the torch and to build, so you don't have to stress about that. And frankly, for many developers, the pressures of public opinion and the need to deal with social media and marketing and listening to the community's opinion on how you should be doing things really drives developers crazy. And I'm actually surprised that Andre stayed as long as he did in some ways. All in all, it's a sad piece of news, but one that will be inconsequential long-term in the grand scheme of things, at least in my personal opinion. More to come on all the news there. Now, really quick, I just want to point one thing out now about blockchain gaming or crypto gaming, whatever you want to call it. And this should kind of tell you how early we actually are in this space. Now, in a report by Non-Fungible, I saw a listing of the top games by dollar value of NFT transactions in all of 2021. And at the very top of that list, you had Axie Infinity, one of the first games to really break out in the mainstream with over 3 billion in volume, followed shortly by NBA Top Shot and Loot with more modest volumes at 820 some million and 240 some million respectively. Now, 2021 was really the year that blockchain gaming captured some attention, so it's no real surprise that there's only one actually true gaming project there at the very top, and that was Axie Infinity. Now, don't get me wrong, Axie is fun, but it's just an okay game altogether. It's not a hallmark game that you want to play for days and days and days on end, at least not in my opinion. I mean, imagine when we have a top 10 volume list that's full of AAA quality games with story depth, top-tier gameplay, and thriving in-game economies. I mean, that's a whole nother level that we haven't reached yet. And if you contrast that with the single-digit billions of dollars worth of NFTs that were exchanged last year in 2021, through the course of these games, for example, I think you're going to see hundreds of billions of volume in the future. Much like the rapid growth of DeFi, I think this is going to be the same. And for this reason, I'm still optimistic about the price of many projects in the crypto gaming space, and I will still be allocating a fair bit of my attention to this area of crypto as time wears on in this space. So picking winners is going to be really hard. It's going to be one that has a lot of risk, but it's going to be lucrative when done right. Now, it's time for Rational Reactions, a segment on the show where I read headlines from crypto-related publications and give you my instant rational reaction. So I'm going to switch over to the computer, pull up the articles we've got for the day, and let's start reacting to these. All right, the first one of the day is from Cointelegraph, and this one is titled, Senator Warren seizes on fears over crypto and sanctions with a new bill. If passed, Elizabeth Warren's new draft crypto bill will require local crypto exchanges to submit, quote, detailed records to the Treasury Department of customers' identities and transfers to private crypto wallets. Now, here's the thing. I understand why people fear crypto as a means to circumvent sanctions, and that is a completely fair thing for people to be worried about, including lawmakers. That's their job. The issue that I have is that it's completely ignoring the fact that crypto is a transparent technology, right? It is a transparent public ledger. So also looking at the fact that there's not enough liquidity to really meaningfully circumvent sanctions, at least not today, it doesn't make sense to be so aggressive in trying to do this. The other thing here is that this is completely ignoring the fact that crypto exchanges in general, in many cases, already are doing the compliance things that they're required to do. I mean, if you look at the Coinbases of the world and you're looking at some of the other like really big regulated exchanges, they're already doing what lawmakers are asking for, what regulators are asking for. So I'm not sure why there's this act being put on as if they're not doing so, and why we need to be so aggressive in the identification of customers' identities as they transfer to private wallets. I mean, maybe that solves the problem, but I don't know that this is the problem that needs to be solved right now. I think energy independence and various other areas of the world are really more important than this right now in terms of achieving the end goal of preventing sanction circumvention. I mean, that's just my opinion. I know that Senator Warren has very strong opinions negatively towards crypto and negatively towards digital assets, and I'm not really sure I understand why, to be honest, given her stances on big tech and banks and things like that. But hey, what can you do? Next story, same from Cointelegraph. FBI director: Russia overestimates its ability to bypass U.S. sanctions using crypto. Christopher Wray cited the FBI's recent work in seizing large amounts of crypto as evidence there were vulnerabilities in using digital assets to get around sanctions. And this is a direct response almost to what's going on with Senator Warren's stuff, right? Russia, in many ways, may be trying, as individuals at least, maybe individuals, to use crypto to get around sanctions. But as soon as a wallet is identified as related to someone in Russia or related to a sanctioned individual, those wallets, in terms of the fiat on and off ramps, and I actually saw comments on my last video about this, even normal everyday Russians who are not sanctioned right now cannot move their crypto into any form of cash whatsoever right now. They just can't. So the reality is, I don't think crypto is the answer here. And I don't think that the Treasury, law enforcement, anyone in the US government really truly thinks that this is going to be the silver bullet for Russia to avoid these sanctions. I really don't think so. Based off of all the stuff I've been reading, I don't think there's a lot of concern. The next story is from Cointelegraph again. I think this is the last Cointelegraph story. U.S. Labor Department warns of crypto risks in retirement plans. With, quote, significant risks, cryptocurrencies have attracted the attention of U.S. legislators looking to decrease the exposure to digital assets in 401k retirement accounts. So I don't invest in crypto in my 401k. I do in my IRA, given the fact that I partner with iTrustCapital. I've used their product long before they ever sponsored my channel in the first place. And I often share it out because I think it's a great tool. The reality is I'm going to be more and more aggressive about sharing the risks, because if you have a retirement account, you're relying on that money long term. I believe in crypto long term. If you're watching this channel, you may or may not believe in crypto long term. So if you don't, you need to be very careful about what you're doing in that retirement account. Even if you do believe in crypto long term, don't bet your entire retirement on crypto. That's silly. Even I haven't done that. And I believe in crypto. My whole career is predicated on blockchain and decentralized technology and crypto, and I'm not doing that. I still have a standard 401k that's invested in equities. I have another sort of self-directed IRA that's invested in other assets that are non-crypto related. And then I have my crypto retirement. So I'm very well diversified. That's my strategy. So I agree here, the US Department of Labor should be thinking about educating, not banning, but educating people as to the risks of doing so in 401ks and retirement accounts. The goal of it, and I've always been clear about this, risk tolerance is one thing, being smart is another. You need to know the risks so that you can react and make a plan. Have a plan. Don't over allocate yourself in one area of the market. Next story is from CoinDesk. Credit Suisse strategist says we are witnessing the birth of a new world monetary order. Quote, money will never be the same again after the Ukraine war, writes Zoltan Pozar, and Bitcoin may be a beneficiary. Now, there's more nuance to this article than you see from the headline, but the reality is it's talking about the shift in the overall monetary order around the world. There is now this huge shift. Cryptocurrencies are in the mix now. You have serious issues around the Federal Reserve and around the world, in the West, in the East, etc. You have this just monetary stress going on right now. So this is a big shift, and I think this is not anarchic in nature, this opinion. This is more so the dynamics are shifting. There are going to be stablecoins existing in many markets that are complementary to the existing financial system. They're going to be decentralized rails for finance that are different and augment the traditional financial system. This is a lot of change that's going on right now, and it's a really exciting time to be alive. So with that, it's 4 stories. I want to save as much time as we can because we got 404 Logic Not Found next, and then I want to save time for Q&A at the end as well. So let's go ahead and dive into 404 Logic Not Found and move right along. That being said, now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please do hit the like button. You can get subscribed, you can hit that notification bell, or you can follow the podcast. All of those things, depending on where you're listening or where you're watching, really help tell those robots that you're enjoying the content and that others might also enjoy it. So thanks so much for that in advance. And a quick coffee break is in order. Now, for months, it seems, I've been playing the same world's smallest violin as I speak to you about the sad trials and tribulations of the Federal Reserve as they try and shift from money printing and asset purchasing to raising rates and trimming that balance sheet. It's an unenviable position to be in, and I empathize in many ways for the impossible place they are in. But this is a disaster of the Fed's own making in many ways as well. By the way, if you're watching on YouTube, comment the name of the SpongeBob episode where Krabs plays the world's smallest violin, and I'll pick a couple random people to win a prize. Anyways, as I was saying, the Fed faces an impossible task here because the war in Ukraine at the hands of Russia is pushing critical prices further up in tandem with the natural forces of inflation that are already in play. Things are getting ugly out there just in simple consumer prices. Recent inflation numbers were absolutely bonkers, up 7.9% in recent reports, and those numbers aren't pricing in the war that's going on in the East right now. As a backdrop, just absorb for a moment that 80% of the US money supply has been printed in the last 2 years. 80%. I mean, if that does not make your head spin, I don't know what will. Now that the Fed money printer has kind of stopped for a little while, the Fed wants to trim their holdings of securities and pressure things in the opposite direction to stem inflation, and that starts with rate hikes. However, they know that in doing so, in hiking rates, equities markets and other areas of the economy will get hit and hit hard. It's almost to the point where I feel that the fork in the road is treacherous either way. On one hand, the Fed stays the course and works to combat inflation and sends us into a full-scale recession, or worse than just a recession, who knows? Or they take the other path, they accept that the conditions in the world right now mean they can't push so hard and cause this economic meltdown, so they continue printing and holding these assets on the balance sheet, and the problem continues to compound ad infinitum. It's one of those damned if you do, damned if you don't situations. And the sad part is that how we even got here in the first place, how we got in this position. The level of fiscal irresponsibility that it takes to get here is fairly astounding across all facets of the economy, from debt to money printing to asset management and more. I don't envy the decision makers right now who face a fork in the road where both roads lead to pain, but this needs to be a lesson learned and a total shift in monetary policy, or we're doomed to repeat the same cycle again, as we have so many times in human history, repeating the same cycles. It's a 404 logic not found that we got here in the first place, but it would be a 404 logic not found of epic proportions if we find ourselves here again one day, having learned this lesson so painfully this time. All right, folks, let's do some community Q&A. I always answer questions from folks who watch the show, and I've got some questions from last week's episode that I'm going to answer. And I want to remind you that if you have a question that you want answered, leave them in the comments below on YouTube, or you can tweet me at Hashoshi4 on Twitter as well, and I'll pick some questions there if you're on the podcast platform. All right, so let's dive into these questions now and see what we've got on the books question-wise today. Now, the first question, actually, this isn't a question. This was just a statement. And this was not intended to call this person out. This is Oliver Zap Games. This was in response to me talking about the idea that if Bitcoin and crypto were being used for sanction avoidance, that the U.S. would just go to ban it, as would other Western countries. Boy, you are naive. No one can ban Bitcoin or crypto at this level. It's a matter of time until adoption. It can go normal or slower, but you can't stop it. Nobody can, I think is what you're trying to say. Yes, this is true. I never said that it would stop it altogether. But if we're looking at prices, right? Everyone cares about the price of crypto. And I'm talking about damaging the price appreciation and slowing the adoption of crypto. And no, you can't fully get rid of it. It's a decentralized technology. I understand that. The point that I'm trying to make, and that I was trying to make in this last video, is that if there were a move to ban crypto in Western countries, in the US, in Canada, in Europe, it would be absolutely devastating for the price of crypto. All the institutions everyone's talking about and saying, oh, the price of crypto, it's different now because of institutions. The first people to go when the government sours on crypto will be the institutions. They do not care about you and they will leave immediately. They do not want to deal with regulatory issues. The next people to go are going to be all the people, and there are a ton of them, who are buying into crypto because they want to get rich and they believe if they buy and hold, they will be rich. If they see the government moving to ban, they're out. You will only have then the people who have any sort of nuanced belief in crypto long-term as a technology, as a paradigm shift. That's not enough to sustain $40,000 Bitcoin, I'm sorry to say. So if you have the US banning crypto, if you have Europe and European countries banning crypto and banning Bitcoin, it will be catastrophic. That was all I was saying in the last video. There's no naivete at play here. I understand that it will survive, but the reality is it would be devastating, and I hope that people realize that that can't happen, right? The next one on the list is from SorPC. I don't know how to pronounce the name, sorry. Can you please help me understand wallet domains/names from companies like Unstoppable Domains and ENS? How safe are they? How decentralized? And what happens to our address NFT if the company no longer exists? Okay, this is an interesting one and a little different than questions I've been asked in the past. So for Unstoppable Domains and ENS, they have decentralization insofar as they are managed by smart contracts. Unstoppable Domains in general has more of a formalized company structure at the face of it. So they may be more centralized as an entity than ENS is, which is run by a DAO. Though I will say that at the underlying piece, the actual smart contracts that manage the domains, those are decentralized by nature. And those are not tied necessarily to the survival of the underlying company or DAO behind them. So in terms of safety, they're pretty safe, right? Of course, there's always smart contract risk in any type of smart contract based asset, like an NFT, which backs these domains. So there's that, but overall, they're very safe. The second thing is what happens when, if the company longer exists. The reality is that the main thing that would change is that the interface, what you use, the online interface, the graphical user interface that you use to manage your domains, and the APIs and services that abstract away the contracts, the smart contract functionality, the complexity, those things would go away. I've talked to folks at Unstoppable Domains, and I know at on the ENS side, there's been a lot of thought put into if those organizations were to disappear, there would be open source software out there for people to create their own interfaces to use those smart contracts. But in the absence of those companies, these smart contracts would still work, right? They would still function. So I think the biggest thing right now in terms of safety that people need to be aware of is that once you associate an address, a crypto address, with an ENS name, you have then linked your identity in many ways. So people who have their names as ENS names or their names as Unstoppable Domains, you're linking a crypto address to your name, which is now on chain, which is now public, and you have to be very diligent about what that means for your OPSEC practices and privacy practices. That's the main thing that I would call out for people to be aware of. And also make sure that you have adequate security in terms of a hardware wallet backing whatever wallet you're using to store these names, because they're a pretty precious commodity. So that would be what I would say. I wouldn't stress so much about these companies no longer existing. I think there are plans in place either way, and they're pretty stable at the moment. The next question is from Vague Gecko. What are your thoughts on Algorand state proofs and the current state of interoperability and quantum proof cryptography? So Algorand state proofs, I think, are a means to interoperability, basically creating a cryptographic proof of the state of the network. Has implications for fast syncing for light clients against the Algorand network, for Algorand's network proving the state of transactions, that a transaction occurred, that this network is in this state, that a variable is in this state, to another network, to another blockchain. I think that the focus for Algorand should be using state proofs as a means to reach interoperability with the other existing interoperability networks, namely Cosmos, Polkadot, etc. If they do that, they then spread the potential liquidity that comes to them and the liquidity they can contribute and the user value they can contribute to those other ecosystems. That would be really powerful. So what I will say in terms of the state of interoperability, it's not even close to where it needs to be. Cosmos, really powerful stuff, really impressive. Icon's BTP, also pretty underrated. And Polkadot, of course, coming around the pike and coming into fruition. But interoperability is still a burgeoning area. I think that the prevalence of bridges is going to wane, and the prevalence of true multi-chain ecosystems where it is based off of a protocol like Cosmos's protocol for cross-chain IBC or multi-chain, that's the future. And so in terms of quantum proof cryptography, not looking great right now. I think a lot of the testing that's been happening hasn't gone well for quantum safe cryptography, but this is going to be something that's going to be trial and error, and we will get there. It's just going to be a matter of time until we do get there. So there are my answers on that. Hope it was helpful. I want to thank you so much for watching and or listening to this episode of Crypto Over Coffee and any other that you've watched or listened to. Please do stick around if you have some time. I have some other crypto videos here. I'll link up on the screen if you're on YouTube. If not, if you're on the podcast platform, just click the back button. Check out the last show if you missed it. Thank you so much. I hope you and your family have a wonderful and safe week and weekend ahead. And until next time, cheers.